What's up, guys? Taiki here, and welcome to episode 3 of the Crypto Market Wizards podcast. Today, I have here with me Jae Chung from Manifold Trading. How are you doing today?
Good. How are you?
I'm good. I'm good. So, can you just tell us how you got into crypto trading, your background, and what you do now?
Yeah. So I actually got into crypto in 2016, 17. Just was really interested in the whole ethos of it. And I have an engineering background, started coding really young. So just got pulled into it. I didn't really start playing around that seriously until I got really into white hat hacking. And crypto was actually an amazing playground because everybody seems to fork each other since the early days. And essentially finding a vulnerability in one thing would lead to finding vulnerabilities in 10, 20 things, essentially. And so, yeah, I was doing that, collecting bounties here and there. I got very into EOS back in 2017. I found the vulnerability in that one. And that was probably one of the bigger ones that I've done outside of a couple other chains and projects. Then kind of stopped doing white hat work and started running validators across a bunch of chains. I was spending a lot less on running nodes and servers than what I was making in terms of block rewards. So I basically took what I was earning and then started trading full time, basically. I was doing all sorts of things, going from trading majors to trading, long tail assets to, looking into building arbitrage strategies and whatnot. Also invested in a couple early stage venture stuff around like 2020. Really started writing a lot more checks over that year. And right place, right time, caught a lot of big moves like DeFi, like NFTs, and also a lot of the venture stuff did pretty well. So, been across time frames, across assets and crypto trading.
Nice. Yeah. So, I guess when you first started out in 2016, 17, you were taking these very low risk strategies of just identifying hack or vulnerabilities, collecting bounties, and then you using those profits to just reinvest. Is that kind of like the
Yep.
strategies that you're really into, just like lower risk, delta neutral, or like those arbitrage strategies? And is that what you do at Manifold? Can you tell me more about your day-to-day operations?
Yeah, sure. Yeah, I think as a trader, my risk tolerance in the beginning was, I didn't have a ton of capital coming into crypto. I was just an engineer. So essentially, a lot of my early success came from using my skill set in order to basically earn rewards and then using that and trying to grow it essentially. And when the capital base you're using is coming from profits, that's usually a bit better in terms of like managing your psychology. Like the losses don't seem as bad. And I think it's actually very important, especially when you're discretionary trading, that like you keep your mindset very tight. In terms of what goes on at Manifold, it's not really a lot of discretionary trading at all. We have a venture arm where, the team discretionarily chooses projects to invest in. We do a lot of due diligence. We have investment committees and whatnot in order to choose deals that we want to allocate to long term. But on the main trading side of things, it's high frequency trading, pure arbitrage, cross venue, ARB, things like that, where really there's not really market risk that we're taking. The risk management side is more on counterparty risk, credit risk, smart contract risk, bridge risk, all that kind of stuff. And really trying to figure out, am I getting paid enough for taking whatever risk I'm taking on these trades?
Gotcha. Yeah. So I remember walking into your office and you were having DBank open and you're like, yeah, I got to rebalance here and here. Got to borrow, on Aave and just all that risk management.
Mhm.
But what percent of your, I guess,
Mhm.
strategies are on chain versus on centralized exchanges?
I would say like pretty half and half. So one of our biggest things is cross-venue arbitrage, where whenever the market moves, you have price dislocations because there's so many different liquidity venues in crypto. And what that means is, if ETH moves up a little bit, usually price discovery happens on centralized exchanges, especially perpetual futures. So let's say Binance, there's a buyer and perpetual futures moves first on Binance. And then it kind of like flows onto the other exchanges via arbitragers, right? And that's how kind of price moves. ETH alone has probably hundreds, maybe like if not more, venues that trades ETH, right? So there's fragmented liquidity everywhere. So, our goal basically, as soon as we find spreads that cover, the cost of that trade, we'll immediately initiate a trade to close that spread, right? And this includes spot, futures across centralized and decentralized exchanges.
Got it. And I mentioned all of it, right? Like, do you usually just like use like stable coins as collateral, borrow an asset, and like close these like I guess like price discrepancies, or like what kind of apps do you actually use on chain to get your strategies done?
Yeah, so on chain, in order to basically trade spot, let's say we want to like sell ETH on chain and then buy on like another exchange somewhere else, right? In order to do that, like you actually need the inventory in volatile tokens, let's say ETH, and we denominate it in USD, right? So in order for us to actually be selling spot ETH, we need to be borrowing it essentially. We're still market neutral because if we sell here, we buy here. But it's like if you're trying to move inventory then to that chain in order to arbit, like you're going to be way too slow, right? So we need inventory basically waiting everywhere. And yeah, that's why we would essentially use these DeFi protocols like Aave, where we collateralize with a stable coin and borrow ETH against it or borrow all sorts of assets against it. And we're able to continuously hit these ARB opportunities.
Yeah, so you're basically like the reason why on-chain degens like myself can get better pricing, like whenever I want to buy things like ETH and Bitcoin, right?
Yeah,
Nice.
basically.
So speaking of Bitcoin, recently we've seen the price of Bitcoin just pump like 15% in 2 days. You mentioned that your most most of your strategies are like delta neutral or just like not taking on market risk. When it seems like the market's the tide is shifting, do you ever just decide to say, you know what, like 10% of our portfolio with Manifold, like let's just like deploy it into certain types of assets? Like, do you kind of like try to factor in your market views, and like where do you think we are in like the entire cycle when it comes to like bull and bear markets?
Yeah, so as a firm, we don't really take a directional view in the market. Um, we do maybe on like a minute's time frame, because we do high frequency trading. We have models that essentially systematically decide if our alphas are telling us to long or short, and get into positions and close out. But you won't see us like swing trading discretionary trades and like holding on for hours or days, for example, on the prop trading side of things. And I think the reason is like we have our bread and butter. I would say nobody on the team has a crystal ball on where the market's going to go. I personally have some like feelings about the market, where I think it's going to go based on my experience in crypto trading. But as a firm, it's like we're very much about sticking to exactly what we do best.
Gotcha. So it's like identifying your edge, and just like pushing that edge.
Mhm.
Got it. So like, where do you think we are in the cycle? You said you have like a pretty good grasp of, just like gut feel, like where we are in the cycle. Obviously Bitcoin's just like moved up a lot, but like, where do you think we are? Like, is it like risk on,
Mhm.
risk off? And how are you personally positioned, if you don't
Yeah.
mind, like sharing?
Yeah. So I personally started talking like to a bunch of my friends and a lot of people that I bounce ideas around with from months ago. I felt like it was actually a very good time to start deploying over this quarter and then the next quarter. A couple of reasons, I think the ETF narrative backdrop, right? I have a pretty strong feeling that it is, and it was guaranteed essentially based on the info that we could see, that it was going to go through. And I think like the market wasn't really pricing that incorrectly. Like it was pricing it as if the chances of it going through was much lower. And I think like that definitely positioned people quite differently. But once you assume like the ETF is essentially guaranteed to go through, like the way you see the market is quite different. I also think that in terms of like the new narratives that are coming up, I do think like consumer apps and like real apps that have better UX than the Web3 applications of the past will start attracting the next delta of users into crypto. And I think we've posted about sort of our consumer app thesis, consumer app infra thesis, whatnot. More and more of these apps are going to come on, and I think that's really what's going to start bringing in new capital, new liquidity, not just a rotation of the existing crypto nerds and the existing infrastructure plays that exist in crypto. So those things combined, I really thought it's a good time to personally start deploying back into crypto.
Got it. So I think when we met like a couple months ago, we were eating pizza, and you're like, yeah, like I'm like 95% T-bills or something. Like, has that changed? Like, are you literally just like doing like a DCA strategy, or like how are you? I guess like how do you deploy, and how do you like? I guess if your views are the next couple of quarters, it's a good time to deploy. Like, are you just averaging in, or like how are you trying to like I guess like time the markets?
Yeah, because I spend so much time on the fund and all of our operations here, I don't have time to be like trading my PA during the day. So just a simple strategy of getting into position, slowly adding to it, not trying to time the market perfectly, to be honest. My general view is that, we're at a point in the cycle where it's a good time to be buying. And so just been accumulating ETH, not as much Bitcoin and as I should have, and I'll continue to accumulate Bitcoin. But like I've sort of always liked ETH as a play where even if I'm wrong and Bitcoin leads for the first X amount of time in a new run up, ETH will end up having some trickle liquidity soon or eventually. Who knows? And I do everything on E/EVM chains mostly. So, it's like, I'm good with like denominating in ETH, for a lot of things. So I'm doing that. I've been doing that. And then a couple things that I have, a good feeling about in terms of having a good chance of outperforming ETH/Bitcoin. So alts, normally don't touch as much, but, ones that I'm willing to hold for a decent amount of time, I'll buy those.
Do you mind sharing like what types of altcoins you don't mind holding right now, or like if you do hold anything right now, do you have any that you're willing to share?
Yeah, yeah. I mean, I hold CANTO, I hold Rollbit, to name a few. Um, I think like there's a lot of assets that I think will continue to bleed to zero, bull market or not. But I think there are a couple narratives that are very enticing, and one of those is one of the big product market fits of crypto is, fortunately or unfortunately, gambling. And sure, the DOJ will likely end up cracking down on online casinos like Stake, and then maybe rolled it right after. But until then, like just the numbers, um, even if some of it isn't fully real, I think warrants a buy on Rollbit. Not advice, but I've been playing around with buying Rollbit slash like other online casino narratives for a good amount of time. But very confident, comfy in that position at the moment. CANTO, I think we posted as a firm about it. Um, we actually kind of seriously do like CANTO long term, or at least in the medium term, where it's one of those tokens where the distribution is not like VCs vesting and then selling into the community. All of the tokens were unlocked from the beginning, and I think like in the previous run up, a lot of the pump and dumps kind of already happened, and I think like tokens that sort of mature along that curve, and over time, like it goes into people that are willing to hold long term. Um, I think just that itself is pretty strong about CANTO. It's a very different like tokenomic structure than your typical L1, for example. And another thing about CANTO, I think, as we mentioned, is RWAs are one of the biggest narratives. There's real stuff being built there in terms of RWAs. As a firm, I'm not sure if we would participate in like liquidity provision for the RWA play specifically, because we think we can make like better returns doing our pure ARB strategies, high frequency trading, whatnot. But I do believe that there's a good there are good legs behind that project, and the team itself is just like they never give up, and those that continue to grind throughout the bear, pretty impressive.
Yeah, definitely like the altcoins that's done well in this market. Like for example, like Rollbit and Maker, they have they make money and they buy back the token. Like you mentioned, like you kind of have to believe the Rollbit team that okay, like these revenue numbers are real. But we have started to see on-chain buys of RLB token, and yeah, it's definitely like one of the crowd favorites. I also like CANTO. I feel like the first when we saw like the Q1 pump, I missed out entirely. Like I just didn't really understand it. But then the token just like nuked 80%. And now, they've completely pivoted their strategy. So I think you kind of have to reprice the entire chain. And yeah, like, definitely a bull in RWAs. And I guess like glad you also agree, with the entire strategy. So it seems like you're always in the office. I feel like you work like 12-hour days, like at least. How do you like manage work-life balance in crypto? Like, have you gone better with it over time, or do you still have to like do you go to bed and like do you think about crypto all the time? Like how do you try to like not like burn out, I suppose?
Yeah. I mean, the first thing, I guess, across the firm is we give everyone free Equinox memberships, which is, very close to the office. And remote guys as well. We try to give sort of benefits to make sure that they're staying healthy and, they don't burn out. So, as a firm, we all like to make sure that like on the weekends, it's unless you're getting paged or there's something going on in the market, not everyone needs to be on call. But then again, like if volatility hits and, within our trading system, we've got all these risk alerts and monitors baked in. If you get paged, you got to wake up and you got to fix it basically. And if not, like there could be risks that, we're losing money on. So there's two things. It's like, because it's, all the time, 24/7 when you're live trading in crypto, you need to be always alert. But at the same time, we make sure that like people have somewhat flexible hours, benefits that like help them, and things like that. And yeah, I think bull market, if it comes through, it'll probably make everyone even busier. Um, but usually on the weekends, there's less volatility, which means there's less constant attention that you need to put in as systematic firm. All the trades are happening.
Gotcha. Yeah, I introduced a couple of your employees like the Blackbird app, and I think everyone's like eating to earn, right? Getting pizza and whatnot. So I think the Equinox membership is definitely needed. So you mentioned like consumer app thesis. Like obviously, I think FriendTech is one of it, right? I think Manifold is a big participant in the FriendTech, like buys and sells the keys. Like what exactly is like the thesis, and how does that fit into your, I guess, your entire like crypto like bull case?
Yeah, so the main part of our thesis is the whole idea that consumer apps are needed in order for us to onboard the next delta of millions of users into crypto. Until now, it's been a lot of infrastructure plays trying to guess, will consumers need this, right? And they're just trying to build the picks and shovels so that if a consumer app really onboards a lot of users, they have enough performance, throughput, block space, and whatnot in order to really give them the user experience that they need. Uh, I think what FriendTech demonstrated was very interesting because it managed to onboard a lot of crypto users, but also non-crypto users. And their mechanism, sort of coupled with Curvy, showed that, consumers really need very Web2 friendly UX in order to feel like they can onboard, and with the right incentives, they would want to onboard onto a new application. Once they're on it and they start earning some fees and whatnot, and they got free ETH, they're going to try to figure out, I have this embedded wallet. What should I do? Should I withdraw it and then try to, sell it on an exchange or whatnot to get, real money, as people might call it in USD notional terms. So I think like that was a very interesting part of FriendTech. And I think in general, like there are lots of new consumer apps coming up. You're very into Blackbird, so are we. And there's a lot of other things that I think will have Web2, Web3 crossover that really helps users onboard onto crypto without at first knowing that this is a crypto app, for example. Um, yeah, as I mentioned before, I think that's really the only way we get a sustained sort of bull market and like use case for crypto in general is if we can onboard more real people instead of kind of rotating around the infrastructure plays.
Yeah, I feel like there's definitely been an over investment in like the infra layer, just because like if you're like a VC, you don't really want to make a bet on a singular app, so you're like, okay, like I'll just fund that L1, L2. Um, and yeah, like Blackbird, really cool. FriendTech, pretty cool as well. Like to follow up on what you mentioned earlier, I guess with like Rollbit, you mentioned like two favorite alts is Rollbit and Canto. How do you like manage risk there? I mean, of course, like as a firm, I think you manage risk really well. But like, from like your personal
Mhm.
book, like how do you think about risk? Do you have like stop losses in place? How do you size these bets relative to your core holdings, like Bitcoin and Ether? Can you like just tell us like your thinking process there?
Yeah, I think in general, like personally, I wouldn't trade or invest with money that I would, suffer from losing. So always setting aside like additional capital that you can either add if you have really strong conviction or, putting it aside so that you make sure that like trading and investing does not negatively impact your life, basically. Um, and another thing is, in terms of leverage, like I tend not to take, that much leverage. Usually positions that I take are a small slice of my total portfolio. Um, Coupled with what I just said earlier, making sure that, each bet that I'm making, I believe that it's like in a plus EV spot. But at the same time, not risking too much where it'll really impact my portfolio if, my thesis was wrong. I think, you know, as I mentioned at the beginning of this, trader psychology is quite important. Some people, will thrive even if they're putting very large chunks of their portfolio into each trade. But I think, mathematically, if you're making a lot of bets consistently into trades and positions that you think are likely to win or, has a higher payout, then, over time, over, a lot of trades, you're likely going to see your portfolio grow, right? So that's sort of the way I like to trade. Yeah, just managing size, positions, trades, extremely important. And, making sure that you're not investing more than you can afford to lose.
Got it. So you definitely prefer, like small wins over time, manage risk, like downside risk. And I guess that also kind of coincides with like how you run your firm. Like, would you say like that's accurate?
Yep.
Do you ever like take on like these potential home run
Well,
trades?
yeah, so I mean, basically the best trade is if you risk little and make a lot, right? Where the risk reward is just extremely asymmetric. So I love those types of trades, right? And I think venture is, one of those types of opportunities where venture as a whole, it's a longer payout horizon, but you can put in a small amount and you can try to go for large multiples, right? So, that's also why we decided to start a venture fund at Manifold. Not only did we realize that, like, personally, we had a great track record at making good venture investments, but at the same time, we had a lot of strong resources and people, engineering, market making capabilities, to be able to support projects. And we were like, why don't we, leverage our knowledge or expertise in order to start making bets that end up, being like longer horizon call options, essentially.
Got it. Got it. So I just want to talk more, or pick your brain more on like the trading side. So obviously you've been in markets for a very long time. Seems like you've done well in the first in like the 2017 bull market. Like how did you cope with like the first bear market in like 2018, 2019? And are there any similarities of like that bear market to this bear market? And do you actually like believe in like the 4-year cycle theory that people like to just share?
Yeah, so I'd say like during the first bear, I was mostly just still focusing on building and engineering, and I was continuously just buying and accumulating, but I wasn't really like trading in and out of positions that frequently. I was probably just swing trading with what I had back then. And I think that was the right play. Otherwise, you would get chopped up pretty hard by the market during that time. I think over time, when DeFi and NFTs came around, there was a lot more activity going on everywhere, and there was a lot more stuff you could do. Um, I think, this bear market has been quite different where like a lot of the stuff was around counterparty risk and like FTX, for example, the UST Luna 3AC blow up, stuff like that, where, um, you know, a lot of the things that caused a massive downturn was very different, I think, from what 2018-19 was about. So, markets are never stationary. Everything continues to change, the context changes and whatnot. Um, and so it's like just because you've gone through it once doesn't mean you know the exact playbook the next time, right? Yes, you have certain nuances. You understand a couple of things better based on experience, but it's definitely not easy. I'd say for like moving forward, um, there's going to be probably new derivatives of like what we've experienced before. Um, I would say like 4-year cycles. It's hard to say, right? There's no reason for that correlation to exist. Like it's just a number, 4 years, right? Do I believe that like there will be another cycle? Yeah, I think so. But I think each subsequent cycle is going to be smaller and smaller in terms of magnitude and volatility. And that's just the signs of a maturing market. As more people, more institutional players come into play, the market itself will mature, will become slightly more liquid each time. And when that happens, there's better pricing that happens across the board. And you actually have a more real market where, they're not really like crazy cycles, but, just ups and downs in the markets, basically.
Yeah, I think that definitely goes along the lines of your, Web3 consumer app thesis, where, for crypto to mature, we can't just have Ponzi's go up and down and, go to 1,000x and then go to zero. Because I feel like at this point, retail or like the majority of the world is tired of these just like crash and burns, right? I think we have to have the next cycle led by actual use cases, and it might not be that fun, right? Like real world assets, not like a crazy fun narrative, but obviously there's demand for 5% yield, right, risk free rate, and then Blackbird, trying to build
Exactly.
like a loyalty program using blockchain rails, and then FriendTech, like this another derivative of social tokens. So the next thing I wanted to touch on, so like what do you think are like the common traits of successful traders? Like how many people like do you employ? Like what do you look for when you're trying to hire someone? And yeah, can you like just give me like your thought process there?
Yeah, so signs of a good discretionary trader. We don't have a ton of discretionary traders within Manifold, but I can share a couple of thoughts on what I think make a good discretionary trader. I think the most important thing is finding your edge, figuring out what part of the game you're good at. And once you have an edge, then you found yourself a game where your expected value is positive, right? And therefore, you should try to figure out how to milk the most out of your edge and just size accordingly in order to try to take the most out of that alpha over time, right? Certain games, there's less liquidity, there's less value to be taken. But if you find yourself with a true edge in a certain time frame, let's say trading Bitcoin or whatever on perps, like you should be really focusing on that instead of like trying to branch out way too much into all these different types of things, right? If you look at traders, they're traders that are good at different time frames, right? I'd say in crypto now, it's hard for a discretionary trader to be good on lower time frame scalping, unless you're like CL or something and have some cat magic in your
Yeah,
hands
yeah,
or whatever. But like usually, you probably wouldn't go for that time frame because the more volume you do, the more fees that you're paying. And if you don't have like systematic execution, it's going to be really hard to compete. But there are people that are very good at like intraday trading. There are people that are very good at swing trading. There are people that are good at I'd say on-chain like shitcoining, for example. And there's very different types of traders. But once you're a master at something, once you know the risks and sizing and what works with you, I think those are the best traders. They just stick to those strengths and like really try to become the best at their game.
Yeah.
When we hire people at Manifold, we're not really looking for the discretionary trading capabilities, but more, it's a prop trading shop. So can they generate more value than what they cost, first of all? And by working with the rest of the team, would they be able to generate even more value than what they could on a personal level? And I think like the most important thing is like, we don't need to hire people that have redundant skill sets or unique capabilities that other people already have. I think it's really like, do we have something new to learn from this person? Does this person bring something new to the table, a new mastery that like not everyone has? And I think, that's what we look for. And, we want anybody, meeting a Manifold team member to go like, oh, wow, this person's really interesting. I learned something new from this person about the market.
Gotcha. Yeah. Speaking of cat magic, I have my pencil box here with the tail that it's really funny. Like CL like works for Manifold, right? Like, what's it like being a partner or like working with him? Because I know like on Twitter he like just talks about like masturbating in socks and whatnot. But like like what's it actually like working with the guy?
Yeah, I mean, I wouldn't say he works for Manifold. We've just been very close friends for a while. He comes around a lot, and he's, helping across the board. Um, Obviously, not like a normal team member that's, working like full time every day. But it's just awesome to have him around. Like everyone loves, working with him, and I think he's one of the most respected and sharpest people in crypto. And one of the guys that I think like with the amount of attention that he has within crypto, and the influence that he has, he could have like monetized it a lot more, right? But I think like he just has very strong ethics, and he, really cares about doing the right thing. And I respect that a lot, right? There are lots of people that have come and gone in this space that kind of use their influence and their track record in not so good ways. But I think like CL is a great steward in the space, and that's why I think a lot of people respect him.
Yeah, definitely for sure. Yeah, I think ethics is very important. I feel like crypto attracts a bunch of less ethical people. So as long as you're ethical, I feel like it's pretty easy to stand out. And yeah, I definitely agree. CL is one of those guys. Like, what do you think are, just pivoting here, like the biggest misconceptions that people have about the crypto market? Like, you've lived through a couple cycles. I'm sure you have some, takes where you see like a new retail participant, like they get into crypto for like the wrong reasons. Can you like just share, like what people get wrong about crypto, and I guess like some sage advice from Mr. Jae Chung?
I mean, like the first thing is the meme, like when Lambo. Like usually, coming into crypto, you actually won't have an edge. So trading crypto, you likely will lose money. It's more likely that you lose money than not, basically. I think what a lot of people get wrong is when they come in, they want to find a next new shiny coin, that's going to multiply 10x as soon as they buy it. I think it's probably the biggest waste of time if someone's coming into crypto to really just do that. In general, like if you have no idea what you're doing, it's best to just over time buy into majors instead of trying to find, random long tail assets that nobody knows about. I think another misconception is, crypto is a technology that is likely going to change the world. And that's why some people come into it becoming a maxi of something. And I think that's the wrong way to think about it. Crypto has a specific niche. I think there are a couple PMFs that have become apparent with crypto. And, some of those things are potentially playing out. who knows? Like, there's nothing that has fully played out, in my opinion. So it's still, trying to find the true PMF of blockchain technology. Um, and until then, it's still just a high risk space with a lot of interesting tech and infrastructure, but it hasn't found full adoption yet. So I would as a trader investor, keep that in mind before jumping to conclusions. A lot of things in crypto are marketed as the next shiny thing that will make a lot of money for you, but most times than not, it's not the case.
Gotcha. Yeah. So, not look for, 100 X's, 1,000 X's, but just think more fundamentally about like product market fit. Like one question, like one
Yeah.
thing I wanted to follow up on is you mentioned, you would rather denominate your net worth in ETH over BTC, and you primarily use EVM chains. But I think one of the strongest communities that came out of, I guess, like the past cycle is Solana. Like, do you have any thoughts on Sol relative to Ether? And like, do you have any like big picture views on Sol that you want to share?
hmm Yeah, I don't want to seem like a complete ETH maxi. Like it's just that like when I came into crypto, like I started playing around with ETH the most. So whatever portfolio that I have in crypto, I kind of think about like, oh, how much ETH am I accumulating? I'll still hold Bitcoin and I'll still hold, ETH like equally a lot of the times and so on. I think like in general, I am quite bearish in the whole L1, L2 thesis. Um, I think the trade has been overplayed. We've had so many chains. Like if we right now did an exercise of naming like just even EVM chains, like we could come up with probably 30 like on the spot, right? And there's not enough space. There's not enough applications that are real with real people using it to warrant that much value being spread out across all these ecosystems, right? I think Solana is interesting. They seem to have real people that still believe in Solana, communities of artists and whatnot that are real. And it's not just the same people like rotating liquidity across chains. But at the same time, I think like Solana does have to find its niche. I think block space in general is decently cheap right now anyway. So just the narrative of being a faster chain is not necessarily something that will like keep relevancy for most chains moving forward. And like, just some thought that I had when I was looking at like the FDV of Aptos, for example. This was a couple months back. It was like 10.5 billion. And I think Discord secondaries were going at 3.5 billion, but like how many people are using Aptos versus how many people are using Discord, right? Like just some of these valuations still make completely no sense in crypto. And, it's going to have to correct eventually.
Got it. Yeah. So, I mean, you mentioned that you don't like the Alt L1 / L2 thesis. There's too much L2s, too much block space, not enough apps. But you mentioned earlier that you really like CANTO, which is like another Alt L1 / EVM L2. Like, what about CANTO makes it different? Where you're like not bearish, the entire
Yeah.
chain.
Yeah, I think like chains need to come up with specific niches that they need to carry out, right? And I think Kanta has done a very good job of focusing on RWAs, which I think is potentially going to be a PMF or narrative that continues to run within crypto. I think a lot of chains haven't really decided on their identity yet, and way too many chains just fight over the identity of, oh, we're cheaper and faster, right? And right now, there's no selling point to that, basically. There's too many people trying to claim the same things and compete over each other, essentially. Um, so I think that's really the main reason. And also, like another thing about most of these L1, L2 chains is VCs basically threw in tons of money at very high valuations. A lot of them during the bull market, they're vesting over, still continuing to vest and throw away those tokens because they don't have that much value because there's no activity on the chain. Um, so I think like that's sort of another fundamental difference in terms of like tokenomics and, trying not to be the exit liquidity of other people.
Yeah. Does like the inflation rate of CANTO ever worry you? Because you can LP for CANTO, note CANTO ETH, you can stake CANTO. LP for stablecoins, the inflation rate's like pretty high. Of course, that helps in that helps bring in liquidity. But like how do you think about token inflation for like an asset like CANTO?
Yeah, I think so. There's a couple things to it. One is inflation is not bad if growth is following the inflation, right? So basically, it's the true growth rate, the real growth rate of Canto in terms of activity, in terms of liquidity, is outpacing the new emissions. I think it's totally fine. That's just a way to, grow even faster and incentivize people in the way you want them to act. On the other hand, if growth was stalling but inflation was still high, then you're really, it's a double-edged sword what inflation is, and I think you're able that's able to change, and I don't think that the structure they currently have is too rigid. Just the way they were able to flexibly change the direction of the ecosystem to RWAs. I think they have a lot of potential to do the right things in order to get make it a successful project. Hopefully.
Yeah, hopefully. I am also long Canto, so I hope you're right for our sake. So like, I mean, going back to Ether, right? You mentioned you've been scaling into Ether, but unfortunately, the ETH/BTC ratio has been pretty much down only. It's approaching 0.05. Do you look at the ETH/BTC ratio? Like, what are your views on it? Do you think the ETF can be sold in use? Like what's your outlook on the ratio? And like, does it really like affect like your market outlook?
It actually makes me more bullish in the market. The fact that alts are bleeding against Bitcoin, it's very good. Um, I have had the thought of like long degens. Degens love alts, degens love rollbit gambling,
Mm-hmm.
all this kind of stuff, meme coins during the bear market. Basically, my whole idea was, degens seem to love alts. Let me, have exposure there. Um, I have some Bitcoin, but not enough, basically. Could be wrong, but over time, I do think that even if the ETF is causing, price discovery and the main run on Bitcoin. Within crypto, I think is always the same, where um, there is going to be trickle down of liquidity into other opportunities, into alts. When that starts happening, it probably means that the space is getting a bit too heated up. But at the same time, I think ETH is one of the first benefactors of such rotation of capital. So I'm not too worried about trying to like chop trade the ETH BTC ratio. And it actually makes me feel more bullish in the market that Bitcoin is actually leading.
Yeah. I definitely agree. Yeah, it's lots of like counter arguments against like the Bitcoin dominance theory and the ETH/BTC theory, but it definitely seems like it's playing out. Do you think like the market is front running the ETF news? It seems like people have come to terms with the ETF just being approved sometime this year or early next year. What like, do you actually think that ETF will bring in new flows? Like, what are your thoughts on that?
Um, so I think like it's hard to say, to be honest with you. I'm still thinking about it internally, and I mean, it would really be for my PA. I think I'm just gonna stick to what I was planning, and I love just like sticking to trades where I've already parameterized everything, and just like continue doing it unless my conviction like completely changes. I think it's still a good time to deploy, as it was, at the start of this quarter. I'll continue to do that. I do think that a lot of people are trying to basically scalp or swing trade based on, their expectation of what's going on with the ETF. I think at current prices, the ETF is still, if it were to get approved tomorrow, like we're still undervalued, is what I think. So sure, some people might be front running or trading this round, but I still think that there's more room.
Sounds like you're very bullish, making me bullish now. Yeah, no, like yeah, I mean, we kind of talked about like portfolio construction earlier, but you also mentioned, like picking high EV spots and whatnot. Like, how do you calculate EV? Because I feel like it's really hard in crypto just because it's such a new space. Do you have like a model in place where you say, if it hits these, this is like the checklist. If it fulfills these things, I'm going to go along. Like how do you like think about EV in crypto for your personal book?
I think like it depends on the context of each trade. It's really hard to generalize and fully quantify. Um, but like if you have a venture trade or a venture investment and your investment size is X and you think there's like, let's say a 20% chance of this happening, that becomes the catalyst of like X multiple. You can probably calculate a general like expected value of the returns from that over like a certain discounted over a certain time frame. And then if you're doing like a let's say long tail asset trade or a shitcoin trade, you probably say there's very high chance of this going to zero. If I'm fully watching during the whole time of my trade position, I could probably maybe avoid going to zero. So there's like rug risk, which is like the probability of it going to zero, slash smart contract risk, which means the security slash hack. Then there's just like, you being the exit liquidity. So you're losing a lot of money and you just have to cut at some point. And then there's like the chance that it really, has multiples, right? And then like you kind of try to, I guess, think about all those things before you enter the trade, set your target and, set reasons why you would exit and like sticking to it instead of changing it on the spot because you can react emotionally. You might not make the best decisions basically if, unless you were able to put the time in beforehand to think about all of the scenarios.
Yeah, so crypto is such a volatile space, and when price goes up, we're all euphoric. When price goes down, we're sad. How do you manage like psychology? I mean, you've been in this space for so long. Like, is there things you do to, I guess, ground yourself? And do you have any advice for people that are trying to make it this upcoming cycle on how to not get too euphoric at like the next market top, for example?
Yeah, I think just trying to learn from the past, and everybody makes mistakes. I think not forgetting about those mistakes and trying to figure out what went wrong, contextualizing it, and then really try to like remember and figure out if there's a similar spot and like avoiding those is really important, I think, in crypto because a lot of things repeat themselves. I would say making sure that you're touching grass, working out, staying healthy, eating. I think there's nothing that you should, substitute for long-term health. Like it's not worth it. And the healthier you are, the sharper your mind is going to be probably. So I would say like those are some things that like people should try not to forget.
Got it. Yeah. So we have to close the podcast soon, but do you have any like hot takes about the crypto markets that you want to share? Things you're bullish on, bearish on, that you think is contrarian? Like anything you want to share?
Um, ooh, I think one thing that was already a hot take was just like the bearishness on L1s and L2s. I really think like capital continues to leave chains that really haven't identified anything for themselves, and I just don't see why they would stick around in the long term. So I would say that's probably one of my hot takes. Um, in terms of like just bullishness overall, um, hmm, like outside of the narratives that I already talked about, I think like not just consumer apps, but consumer app infra, I think is super important. Like just the recent stuff that we saw with Privy, we now know that like a lot of people prefer a certain type of UX as long as like security comes with it. So just like making sure to, um, stay on top of those developments, I think will be quite beneficial. There's a lot of account abstraction plays, wallet abstraction. There's embedded wallets like Privy, a lot of innovation happening there. That's really exciting.
Yeah, I'm curious to hear your thoughts on ARB and Optimism, like those two tokens. You said you're bearish like L2 tokens and L1 tokens, but both ARB and Optimism have pretty strong communities. Do you think those tokens will ever have like strong value accrual, or do you just think that they're like those VC bags that will like just eventually just like go down over time against Ether?
So I'm not sure about value accrual, and I do agree that there's a lot of emissions that are still coming. But in terms of mindshare, it's pretty important in crypto to have mindshare. Arbitrum seems to have a good chunk of it, and a lot of developers have built on it. And there's, native assets like stable coins natively on Arbitrum. There's a lot of things there that like the general infrastructure is very stable where like it attracts a lot of builders. So I think like because of that, Arbitrum probably won't be the first to fizzle out. I think they've still got legs to have traction. I don't know if the token will do well, but I don't think that Arbitrum as a chain in terms of like staying active will go away too soon. I think optimism is somewhat similar in that regard. But one additional thing about optimism is like a lot of other ecosystems are using it and they're thinking about ways to add more value accrual back to optimism. So that's pretty interesting, like base, BSC, all those types of things where they're trying to basically use optimism setup, I think is pretty interesting. And yeah, so I do think those two still capture some mindshare. And not sure if the token will truly, find a new top in a bull market, but we'll see. I think they are definitely better out of a lot of L1s and L2s out there.
Yeah, in my last for episode 2, I had Thicky on, and he kind of said that all crypto tokens are kind of like meme coins, where like it's really hard to find like actual value accrual, and people like for example like people will long Arbitrum just because like there's people that use Arbitrum, it's an ETH2, I'll buy it. Do you think value accrual actually matters in crypto, or do you think that these tokens are just a form of like a way for people to speculate, like potentially like make money as number go up and down?
I think it will start mattering more and more, to be honest. I think the state of crypto until now has been that way. But, following up on sort of what I said about the market will mature over time, cycles will get less and less apparent, things like that. I do think that, you know, there will need to be real value, in order for, real bids to come in on certain tokens. I think like meme coins will never go away. But I would classify those differently from sort of real value adding projects in the future.
Got it. Yeah. Like final question, I guess, like touching on meme coins. Like I'm personally not a great meme coin trader, but do you think Doge will ever come back? Like, what do you think about Pepe? What are these things, right? like, do you think Doge will ever hit new all-time highs? Do you have any takes on like meme coins?
Potentially, I think, you know, it's like a function of where the market is macro wise as well. With current markets, do I really think that Doge will find new all-time highs? Probably not. But there will likely be different market contexts in the future where it's not out of a realm of possibilities, right? It's like, when you say some things might happen or not, you come with like assumptions, right? And under current market assumptions, like I see it as being very unlikely. But there are other regimes where it becomes a lot likelier. Like the last all-time high of Doge was one of the biggest bull markets in crypto. Interest rates were extremely low. There were, meme stocks, and like the whole thing became a narrative and a meta of its own. So, it was one of the best prime spots for something like that to shine. And we're not really in that regime right now. It could come back, but I don't see it being very likely soon.
Gotcha. Final question, then I'll let you go. What are some trading rules that you live by, especially when it comes to crypto?
Yeah, I think as I mentioned earlier, don't risk more than you can afford to lose. Try not to take too much leverage. Stay away from cowboy options trading, I would say. I think like out of everyone actually that's made it in crypto, there's been I've seen shitcoin traders who have made it. I've seen crazy leverage traders who have made it. I've seen people that just accumulated spot or invested in venture, but like I've not seen a full-time options trader that has like really made it in crypto. I think it's hard. It's it sounds enticing. Like a lot of people on Robinhood trade like stock options, right? But I think in crypto, it's like there are other spots where like you will find an edge probably a bit quicker. So yeah, I try to stay away from doing that as well.
Yeah, I feel like people just love to take screenshots of their options, just like up 20x or something. So it like brings in those types of
Mhm.
traders. But yeah, I agree. I don't even know an options trader that's like made it. Maybe they're anon and in the depths of crypto Twitter. But anyways, thank you, Jay, for coming on. I think our viewer and I definitely learned a lot. Where can people find you on Twitter?
Yeah, they could find me at underscore Jae Chung on Twitter. I don't check it super often, but if someone messages me, I'll try to respond.
Awesome. Well, thank you, Jay, for coming on, and I hope you enjoyed episode 3 of Crypto Market Wizards. Thank you, and bye bye.
Thank you.